What is ESG Finance's role in global corporate strategy? Imagine a future where companies are not only judged by their financial success, but also by their impact on the environment, society, and how well they govern themselves. This vision is becoming a reality through the integration of environmental, social, and governance principles into corporate strategies. Environmental, social, and governance finance, often called ESG finance, plays a crucial part in shaping how companies operate on a global scale. ESG finance involves the allocation of capital based on a company's performance and commitment in these three areas. Investors are increasingly considering ESG factors when making decisions, recognizing that companies with strong ESG practices tend to be more resilient and better positioned for long-term growth. For example, firms that prioritize reducing carbon emissions and adopting sustainable resource management can lower operational risks associated with regulatory changes and environmental disasters. Incorporating ESG considerations into corporate strategy encourages companies to innovate and adopt sustainable practices. This might include investing in renewable energy sources, improving labor conditions, or enhancing transparency and accountability through better governance structures. Such initiatives not only align with societal expectations, but also open up new market opportunities and improve brand reputation. Furthermore, ESG finance influences corporate decision-making by promoting long-term thinking over short-term gains. Companies that embed ESG principles into their strategic planning often see benefits such as increased investor confidence, access to a broader pool of capital, and reduced costs related to environmental compliance and social issues. For instance, firms that proactively address climate change risks may find it easier to secure funding from investors who prioritize sustainability. Regulatory frameworks around the world are also evolving to support ESG integration. Governments and international organizations are establishing guidelines and reporting standards that requiring companies to disclose their ESG performance. This transparency helps investors assess risks and opportunities more accurately, encouraging companies to embed ESG factors into their core strategies. In essence, ESG finance acts as a catalyst for transforming corporate strategies into more sustainable and responsible models. It guides companies to balance profit-making with positive societal and environmental contributions, ensuring their growth aligns with global sustainability goals. As this approach continues to gain momentum, it will shape the future of how businesses operate across all industries and regions.